I don't know where to start with Deutsche Bank, because as Alex said, they had a downgrade at the end of last week. There are reports that Garth Ritchie and Mr. Jain, the former CEO, are under investigation now for this tax problem. And then we hear news that they got problems with their payment system and maybe some money laundering.
So let's start with Fitch, because that's a really big deal. The problem for everybody at the top of the bank is lowering funding costs. That was a key priority. Now with Fitch's downgrade, that might be a bit of a problem. This was a problem for example, the prime brokerage, which we've seen languish over the last several years. The problem is it going to be an issue for different lending activities for Deutsche Bank, we'll see moving forward.
And what does it wind up meaning then for Ritchie too? Like we know that's embattled, but like they're still trying to do something with their investment banking arm.
Yes, so where they're going to find spots to grow is a real problem, and how Fitch falls into this is a real problem. As you had mentioned also, Garth Ritchie is now in this wider probe regarding the tax hiding, right, in Germany. So Ritchie is definitely under a lot of pressure, and so is Sylvie Mathrat, this chief regulatory officer, which obviously there's a widening probe, and there's another problem that was reported in the FT this morning as well about a bunch of checks that were cleared that perhaps didn't pass the anti-money laundering controls, which we've seen with Danske Bank, for example. So, you know, that's a problem now in London and in Jacksonville, Florida, and in New York.
Of course, part of the problem here, Mark, is sorting out the idiosyncratic for Deutsche Bank from the larger issues about European banks, because they've got some problems of their own.
Exactly. I think that's the fascinating thing. You know, so many of my friends on Wall Street are so concerned about Italian banks, bad loans, the whole non-performing loans, the debt of the government. And I really think that a lot of the focus ought to be on the core of Europe. For Italy, this is a chronic problem. We've known about this for a long time. But it seems to me that the problem is becoming more acute in the core, like in Germany.
But do you feel, and your friends on the street, when you talk about it, that like it's going to be fine because the name's Deutsche Bank?
I think that might have been the case a year ago, 2 years ago, but I think it's like diminishing, less confidence in that. And the same rules that prevent Italy from bailing out its banks. So to really tie Germany's hands in dealing with Deutsche Bank, which is a much bigger problem. You know, we talk about U.S. banks in the past, too big to fail. Deutsche Bank might be too big to save, given how big its balance sheet is, compared to the German GDP.
And I want to point out, by the way, lower funding costs was one of the main reasons that they wanted to do a merger in the first place. And so this is going to be a problem moving forward. Obviously, that deal died. And so to keep those funding costs low without a merger, does it spur another kind of combination, not just for Deutsche Bank, but other banks?
And it feeds on itself.
Problem.
The more problems they have, the more that the funding costs go up. It's a practical matter.
Its own CFO calls it the vicious circle.
Well, also, like, all the things that come up, like with the FT, et cetera, that all doesn't have to do with their current issue of not being able to grow and like negative yields and all of that. That's just sort of old compliance and sort of something that they can't escape. That's two totally different things.
Operational versus liquidity.
Yeah, I think it's too big to manage. We talk about too big to save. No. It's too big to manage. These large companies, how can a manager really know everything that's going on when you're talking about something that's these huge companies that we were talking about before with these M&As?